We're reflecting on 2015 on this energy edition of Industry Focus. Greetings, fools. I am Sean O'Reilly, joining you here from Fool Headquarters in Alexandria, Virginia. It is Thursday, December 24th, 2015, and joining me to help load up Santa's sleigh with energy stocks is Tyler Crow and Taylor Markman. What's up,
hello,
guys?
everybody. We are totally recording a podcast the day before Christmas, just for everybody's enjoyment.
Ho, ho, ho.
Ho, ho,
Ho, ho, ho.
God bless us, everyone. If I was going to work on Christmas Eve, I'm glad it was with you guys.
If we were working on Christmas Eve.
Cheers.
Guess we'll just dive back in unless, I don't know, somebody wants to.
No, take it
No.
away.
Take it away.
All right, diving right in. Segment 1, a somber review of the Energy Fantasy Draft. This one is a doozy,
Dun,
ladies
dun,
and
dun,
gentlemen.
dun, dun, dun.
That was
Oh,
actually
man, it
really
was
good.
ugly.
It was a Monday night.
All right, so
So maybe a little bit of context for maybe people who didn't.
when did we start this?
We started this week 1 of NFL.
one of NFL.
So
Okay,
I think
so,
it was
all
It was
right.
the official draft.
it was opening day of the NFL
Thursday night.
season, and we said, screw it, let's do a fantasy draft of our favorite energy stocks and see how we turn out by the end of the year.
So in third place,
We're taping it early instead of the end of the NFL season because fantasy football playoffs
Yes.
are starting
these prices are as of 12/16/2015.
Yes.
So 16. In third place is yours truly. I foolishly just assumed that it couldn't possibly get worse for oil prices when this stupid thing
Oil
started.
can't go any
Back
lower.
It
the
would be
truck up on
crazy.
producers, didn't you, Sean?
It would be, I don't know, go big or go home, Taylor.
Yeah, it was a short-term game, so you made a worthwhile bet.
Let everybody know what your picks were and how they went. This is
I
your
went
shaming.
with EOG.
This is your shaming.
Oh, God. As long as it's not as bad as what the guys upstairs do with their. Oh my God.
You have to publicly
Have you
announce to
heard?
everybody on the on our podcast, all 5 people that listen, what you did.
I picked. Actually, I'm going to start with the worst, just so I can make myself look smarter at the end. Lynn Energy at 3.5. It's at $1.37, so that's down 60%. Oops. I swear the hedges will save me. In second, it's Continental Resources. I just had to go with Harold Hamm. That's actually not doing too badly considering what oil prices have done since this started.
Keep telling yourself that.
And he's the lone survivor of the Frackers book I mentioned in last week's podcast.
Oh, are all those guys literally gone?
Out of the business.
Oh,
Yeah,
wow.
so
Okay.
it's
EOG is obviously still doing very
Oh,
well,
yeah.
but the guy, Papa, that they
it
talk about is no longer.
profiles like a half dozen guys in the oil industry. Aubrey McClendon gone, Tom Ward gone, Sharif Suki gone,
just recently gone.
George Mitchell passed away. So
Bless his soul.
but
Pioneer.
But yeah, the only one left.
Rest in peace.
Only one left is Harold Hamm.
I picked that at 29. It's 26.
That's
I
not
mean,
too bad.
That's whatever. I don't know. And last but not least is EOG. I picked that at 78. It's at 76. So, I mean, down 3%. On the whole, down 24%. In second place is everybody's favorite energy analyst covering, in particular, Canada, Taylor Markman.
You had to just qualify with covering Canada, huh? You couldn't have just left it at everyone's favorite.
Am I wrong? Am I wrong?
Okay. What did I pick again?
You don't even know.
I know I do, but I want
All right.
I want to hear your voice say it.
So your best pick was
Silver Wheaton.
Silver Wheaton, up almost 13%. So kudos. Second place was Spectra Energy. Picked it at 28. It's at 24, so down 14%.
Thank you, Kinder Morgan, for crushing that
Yeah.
performance.
And Devon Energy was your worst pick, down 23%. You picked it at 40, and it's at 30.
Womp.
Any regrets?
No, not really. I would hold
feel
on to
pretty
all
good?
3 of those.
Good.
Yeah.
Very good.
Just disclosure, we did not actually purchase these.
No,
Yeah.
this is
These are
a paper portfolio.
hypothetical, yes.
And the winner of the 3 of us,
Victory is
ladies
mine.
and
Come from
gentlemen,
behind.
up a whopping 1.5%. Tyler Crow.
All right.
Don't spend those winnings all in
We
one
should
place.
have warned everyone to turn the volume down before
Sorry
we...
about that, everybody.
I'm sure Austin can fix that.
It's okay.
I wanted to emphasize that
Yeah.
awesome return, 1.48%.
Yeah, we had a great year.
Best performer was Solar City coming up from behind.
we
Wow.
By the way, had
How
we done
how
this,
low? How down were you on that?
we were down like
was
30.
It was Lynn
40%.
Energy bad.
30 to
It was
40%.
Lynn Energy
And
bad.
had we
Maybe
done this,
what do you buy it at?
Actually, yeah. 48.
So it was down in the mid to low 20s. So
Right.
yeah, about 50%.
That's Lynn Energy bad,
Right.
sir.
And
That's
so-
Lynn Energy bad.
And had we recorded this a day earlier, I would have lost. But guess what? The federal government comes in and gives a tax incentive credit back to Solar City.
So
up
before we
40%
started-
in a day.
I mean, correct. Nobody saw this coming.
Nope, I didn't.
Nobody.
I would have bought
I
more
don't think-
Solar City if I had.
I edit all the little Solar City articles that go through Fool.com along with Tyler Crow here, and I came out of nowhere. I mean, I didn't even catch wind. I don't know.
I mean, there was some lobbying on it, but nobody thought that anything was going to happen. And
yeah.
I certainly, when I made that pick,
some sacks of money were exchanged,
Yeah.
but nobody thought.
when I made that pick, I had no premise of like they're going to extend the investment tax
Right.
credit on it. I just thought it was going
Draw
to be
the
able
line,
to do it
interesting.
anyways,
Yeah.
or do some sort of growth and be decent. But hey, you know what? If you have to drop back and throw a Hail Mary,
It's still
It
rising now,
works.
too.
Might as
so
well throw it to a growing industry.
yeah.
Good for you. The other two picks of yours, of course, were Helmerich and Pine, and did I say that right? Payne.
Helmerich and Payne.
Payne.
Yep.
One never knows.
And-
That's up 6% as of close on the 16th. And the worst performer is Enterprise Products Partners, but they've got a nice dividend yield, so maybe
Yeah,
we'll
we didn't
see.
even include dividend yields in anything here. I
No,
think
yeah,
I might
that
have
was
got a
all
boost.
stock appreciation
Cool.
Yep.
Very good.
or depreciation.
So we're running this through the rest of the season, right?
We can.
Yeah, we'll call it
Give it
playoffs
another month.
from here on
Yeah,
out.
playoffs from here on out.
I swear I got a lot of tax loss selling going on. for
Tyler's
Lynn,
the
so
one.
maybe I'll get a pop
Tyler's
on
the
first.
one seed.
I get
so
the buy. You two have to fight it.
That's fine. Okay.
No, no. All right, so Tyler Crow's winning right now because he's far luckier than he is good.
That's for certain.
So moving on, I'm anxious to get your guys' thought. Okay, so end of the year, this has been, I don't think I'm understating it to say this has been a rough year for oil and energy stocks.
Yeah, we just proved that.
I mean, this is like,
Yeah, let's just
call it what it is.
call it what it is. Not
Biggest surprises, biggest disappointments of the year. Who wants to go first?
Biggest. I have a surprise, which is kind of a disappointment. I don't own it, so it's not very disappointing, but
Definitely a surprise.
surprise. The Kinder Morgan soap opera of the last couple months is one of my biggest surprises.
The
Third
dividend
largest
cut,
company,
the-
energy company in North America. Supposed like stalwart dividend payer. Brightest CEO in the energy industry according to almost everyone.
Darling of the former Enron empire.
Yes.
All that good stuff.
All that good stuff. And then out of nowhere, they go ahead and they acquire more of Natural Gas Company of America. Get downgraded on their outlook by Moody's. Market gets a little crazy.
starting
start
to worry
selling
about losing
Because
their
this company that
investment
they bought up to 50% of it, and it was a very debt-laden company. So they're
Do
worried.
you think that was a smart move? Like,
I
is the
don't
market wrong?
I don't know. I haven't looked into it enough to really understand whether it's a good move or not. But Moody's thought that they would have to put a whole ton of money into this company to restructure it. Granted, the other 50% is owned by Brookfield Infrastructure Partners, which is a very well-performing company out of Canada that has a great reputation. So two companies, obviously, that have great track records, have a lot of faith in this company, but Moody's downgraded
Got a little
their
nervous
outlook.
at their debt levels.
Yeah, a little bit nervous at the debt levels. So what happened next? Kinder Morgan said they're trimming their growth of their dividend from 14% to 6 to 10% next year. Then all of a sudden they're like, oh, well, maybe we're not going to grow
What
it
the
at
heck
all.
happened? What was the
And
time
then all of a
span
sudden
there?
they're like mid-October to mid-November, late
Yeah, this is
November.
the 2-month story towards the end of the year.
Then they're not going to grow it at all. Then they're going to cut it by 75%.
What happened in that month?
I think they just came to the realization that I think they might have known it, but then the rating agency came out and got ahead of them,
Confirmed
and
them, yeah.
they were worried about losing their actual debt rating.
Right. And then the stock went up.
Well,
after
that's
they cut
because
it.
they cut their dividend. That was
Yeah.
the big overhang. So they had a lot of they had more short interest. They had a lot of selling of yield holders worried about a dividend cut. So once they made it, people were like, okay, it's cut 75%. We know what the stock is about now. They're not going to take on any more debt. They're not going to issue equity. They're going to fund their growth internally. They're still Kinder Morgan.
Right.
Let's get into it a little bit more. Take a little bite because it's trading around book value.
Yeah.
At least it was before it popped
Right.
a little bit. And that's where we stand today. So dividend down 75%.
Nice.
Paying like it was up to like a 13% yield at one point. Now it's around a 3% yield. A little bit more reasonable. Still lower than it historically was.
Played out like a nice, beautiful Telemundo. So
Yeah, totally. 2 months, it was like a great series, except it was something that happened almost every
I
single
wonder
day.
what's going to happen next.
So I think that you've probably seen the end of this saga because their outlook is now stable again for Moody's. They basically were just on the phone with Moody's for 2 months, figuring out what the heck they need to do to get their investment grade ratings, not back, but keep it, and then get their outlook from negative to stable, which they did like the very next day that they cut their dividend.
Wow.
So here we are.
That's a good pick.
Yeah. That's,
Can you top him, Tyler?
I know it sounds kind of weird because we're talking about all of 2015, and I just happened to be picking something that happened a week ago, or this week actually, and was the extension of the investment tax credit on renewable energy.
They didn't just go out a year or two. They went out end of the decade.
Yeah.
forever.
So, I mean,
That's a
Sandlot.
Sandlot reference, ladies and gentlemen.
So we got an extension of wind and solar on that 30% investment tax credit out to at least 2019. Then it starts to taper off until 2021, out to 10%. And obviously you can watch stock prices, and solar companies loved what happened with this over the couple of years. But if you think about the growth trajectory that was already baked into the solar industry, how they were like, we're going to have a little bit of a hiccup in 2017 because people are going to have to adjust to this new world without the tax credit. And then all of a sudden, hey guys, it's back. So you get that 30% discount. And I believe there was an article written on Bloomberg, I think today, and they were talking about this could add easily at least another 20 gigawatts of production capacity in solar alone, and
Which is no small.
another 18 to 20 in wind. So we're talking about actually moving, more and more towards that sort of realm, which is going to have the domino effect. You think about coal companies, all of those old coal plants that are going to get pushed out and things like that.
The other day, China, there's a company in China that is announcing 100,000 layoffs. It's a coal company. 100,000 layoffs.
That's huge.
We're talking about like big layoffs, like 7,000 to 10,000.
Everybody
people.
loses their mind when Schlumberger cuts 10,000 people. These 100,000. That's basically
100,000 jobs.
That's like more than the entire workforce of a company like Schlumberger.
Yeah.
So yeah, that's the coal industry state of
There you
affairs
go.
right now.
100,000 jobs.
Thank
lost.
you, solar.
Wow. All right. Well, before we move on, I wanted to point our listeners to a newly redesigned focus.fool.com. There you'll discover a special offer to join the Motley Fool's Stock Advisor newsletter for all industry-focused listeners. All loyal AF listeners have access to a special discount on Stock Advisor that works out to $129 for a full 2-year subscription. And if you join today as part of your new subscription, you can check out exclusive content from Tyler Crowe and I's recent trip to Houston, Texas, where we interviewed executives from National Oil Well Varco and Distribution Now. That was a pretty good time, right, Tyler?
Great time. We'll probably be talking about it for a week because, one of the great things about it was just talking business. And, normally you see these guys and they get like their 3-minute segment on CNBC and they have to make their pitch. We gave these guys a full 30, 40, and even an hour to just talk about their business and really lay it out for investors on what they want to do.
Cool. So moving on, guys, I'm anxious to just kind of get your opinions on how 2015 has shaped and or changed your investing outlook.
I'll give you the baton on this one to lead.
Oh, boy. I had been...
You're bloodied. You're bruised.
I'm quite bloody. I'm quite bruised. I certainly made my fair share of mistakes. I had been leaning towards in 2015, but totally confirmed it here, was the idea of if I ever hear an executive in the energy industry ever again say, we will grow into our debt load,
Run.
I am going to run away.
Run for the hills.
as fast as I possibly can. I think
It's a good one.
we got enamored with companies saying they can grow. They'll be able to, build, kind of grow into that debt because they're going to take it on and they're going to
it's cheap financing.
expand. It's cheap.
Can you give us examples of people that actually said those words?
I believe I'm trying to think of a couple examples. Whiting Petroleum, they bought Kodiak Oil and Gas.
Then they literally begged the entire industry, please, somebody buy us.
yeah, and couldn't get a decent price.
They didn't even get a bid.
Desperation.
They didn't get a crappy bid.
Just
They
happened to get
didn't-
some cheap financing to make things go through. And there was just so many companies that just levered themselves out the nose to grow into this shale basin, shale play, and thinking that it was going to be this completely transformative thing, like America can become energy independent. We're still part of the global marketplace. And as fast as we grew, there's only so much demand globally that can be accommodated. And, some places are going to lose, some places are gain, but we can't gain as much as we thought could be added to the market the way that we did. And to say that you can grow at these sort of levels and just take on debt and not finance yourself with conservative, smart capital allocation using cash flows, things like that, I know it seems reflective saying it now, but it just shows how important just basic good business practice is.
Cool. Taylor?
Just one thing. He said energy independence, and I think it's even funnier now that we're going to export oil because they say that we might import more oil than we currently are just because we're going to export it. Just a little funny anecdote about becoming energy. We could be energy independent, but we never will because we're always going to sell oil.
We're all
abroad.
connected by the circle of life.
Exactly
Taylor.
right. Kumbaya in the energy
Kumbaya.
industry. So my, I guess, reflection is the importance of diversification in a portfolio.
Deep. And buying silver wheaton.
And buying silver wheaton. No, there are tremendous businesses in the energy industry, but you're still part of the energy industry. So even though you're investing in good businesses, do not only stick to one industry. And I think this proves why. Like, you can find the best business in an industry, but it can still suffer right along with it. So
Cool.
Yeah.
Thank you for your thoughts.
Yeah,
What about
it
you,
was just
Sean? I mean, you're an investor too.
pretty basic thoughts, but I mean, it's like basic thoughts are put on a
Sometimes-
pedestal when
Sometimes you need to get hit over the head
Yeah.
with a hammer really, really hard to remember to go back to the basics.
especially when
of
the
investing.
market is performing very well.
Well, I started my career at The Fool in September 2013, and I started in consumer goods and tech. And then, I don't know, 8 months ago, I pivoted over to energy and industrials. And even before that, I had been asking you because the carnage in the oil industry has started last November was just,
It hasn't gotten any better.
no, it's gotten worse.
Well,
and that's just
welcome
it.
to the energy
It-
industry, by the way. After
Yeah.
8 months of just perpetual decline.
It's just been like, yay. No, just it can get way worse before it gets better.
As evidenced by your energy draft picks.
Hey, now.
Oil's going up from here. I mean, it can't get any worse.
We can't
But
all get bailed out by the U.S. Congress.
I think we need. I would love to go back to the September thing because I do believe those were the words that you said. Like we got to be somewhere near the bottom here, guys. Right? Like
Well, I'll tell you what. Tune in next podcast. We'll be talking about cash costs
Yeah.
and oil.
Wait, we
hopefully,
are?
well,
We
from
are?
that awesome
Oh, yeah,
slideshow
yeah,
you sent
right,
out.
yeah.
I
Sure.
want to. I don't
Okay.
know. Or not.
If you force the issue, we'll talk
total
about
surprise.
I'm the host. We're going to talk about what I want to talk about.
it. Well, what are we talking about next, boss?
Actually, that's it for our show, Taylor.
That is it?
Yeah.
Oh, okay.
Sorry.
That's easy.
Tune in next time.
All right.
Same
Thanks,
bat
fools.
time, same bat channel.
Same pre-taped show.
From Taylor the Great Bambino Muckerman. All right. Well, if you're a loyal listener and have questions or comments, we'd love to hear from you. Just email us at industryfocus@fool.com. Again, that's industryfocus@fool.com. And as always, people on this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against those stocks. So don't buy or sell anything based solely on what you hear in this program. For Tyler Crow and Taylor Muckerman, I'm Sean O'Reilly. Merry Christmas and Fool on.